Hello, this is Monica Sawyer. Welcome to Real Estate Investing for Women, where we focus on all aspects of real estate investing, including strategies, mindset, emotional mastery, money smarts, and so much more to ensure your success. If you'd like to learn my personal favorite investing strategy, just go to blissfulinvestor.com. You can also listen to this episode on the Real Estate Investing for Women podcast on iTunes. Now, let's welcome our guest. Today, I am so excited to welcome to our show our guest, Alina Trigub. Alina is the founder and managing partner of SAMO Financial. It's a boutique private equity firm specializing in helping a select group of people passively invest in commercial real estate. Alina's business motto has been articulated well by Warren Buffett, indicating that someone is sitting in the shade today because someone planted a tree a long time ago. I love everything Warren Buffett says, and I love that quote. Alina is the founder of two meetup groups named The Power of Passive Investing Through Real Estate, which gather in New York and New Jersey. Alina offers educational webinars in collaboration with various administrators of self-directed IRA companies on such topics as getting started investing in syndications by using funds in solo 401ks or self-directed retirement plans. Alina has helped her clients to acquire and invest in over 1,200 apartment doors, wow, over 10 million fund focused on self-storage, and over 10 million fund focused on mobile home parks and storage. Wow, Alina, that is amazing. Welcome to the show.
Thank you, Monique. I'm excited to be here. Thank you so much for inviting me to your show. It's really awesome to be on your show. I've been listening to it for a very long time, so it's a pleasure to be here, finally being interviewed by you.
Yeah, well, thank you for that. And thank you for listening to the show. That's really flattering, actually. Thank you.
Thank you for producing such phenomenal content. It's definitely worth listening. I highly recommend it to others.
Oh, awesome. Thank you. Thank you for that. So, Alina, let's just start by you telling us your story. Like, how did you get into this stuff?
Sure. Well, I started investing in real estate roughly about 6 years ago, but it started, I want to say, long time ago, long before that. I started my professional career as a tax accountant, and while I never liked accounting and left the field after a few years, taxes has always been on my mind. I always thought about what are the ways to minimize taxes. And later, when my husband and I started a family, it also came to mind, like, we always paying these high taxes, and then AMT, the alternative minimum tax, hits us. There should be a way to minimize the tax payments, and that obviously led me to real estate. So real estate has been on my mind for a very long time as well. But I haven't really taken any action. So finally, about 6 years ago, I decided that now is the time I have to take action. So I did that. I started researching and looking for properties locally where I live in New Jersey. But the numbers just wouldn't make sense. Everything was so expensive and overpriced, and people were going into bidding wars to get the properties, and I never wanted to be part of that. So I thought the next natural step would be to go out of state. And while looking at out-of-state strategies, I came across syndications, and that piqued my interest. I thought to myself, this is an interesting strategy. It sounds like I can become a real estate investor without putting much effort in it. So after doing additional research, I finally took action and started investing as an equity partner in someone else's deals, passive investor. And I have done one, then another, and then another. And after doing a few of them, I realized the tremendous benefits, not only the residual income, but also the tax benefits, and then the social impact component, the improving the communities. that made a huge impression on me. And I started thinking to myself, this is a niche that most people are not familiar with and don't know really much about, because it's private placement. It's not advertised much out in the world. And out of this, an idea of my own company was born, where I decided that I'm going to start a company with the sole purpose of helping other people who would like to invest in real estate, but for whatever reason, either don't have the time or don't want to deal with the tenants, would want to partner up with us and passively invest. And so that's how I started my company and have been growing ever since. But again, the purpose has always been to help other folks to passively invest and diversify their portfolio. In addition to having stocks, bonds, mutual fund, now have something of a substance, like real asset, where real estate is the real asset, something they can touch, not a stock that you cannot really touch or feel, and reap the rewards of being a partial property owner through syndications, which is incredible. And a lot of people have been grateful for the opportunities that I've presented to them and opened up their eyes to the world that they didn't know existed in the first place. So it feels very rewarding, and that's why I picked the phrase that Warren Buffett wrote, and I actually have it on my business cards as well, because that is a true reflection of how I live my life, and that's a true reflection of what I'm looking to get out of this life. Sorry if it was a very long introduction.
No, that was fantastic. I've got like 3 questions right off the top of my head that I want to ask.
Awesome.
Yeah. So the very first one is, I know you are a CPA, but you're not giving tax advice on this show. But could you
former
give us
accountant, not a CPA, small correction, former tax accountant.
Okay, got it. Forgive me for that.
CPA.
Yeah, forgive me for that. But could you give us like a brief high level idea of what the tax benefits are of going into a syndication project? Is it any different than regular investing, for instance, in single family homes? Or could you give us a little bit of an idea around that?
Sure. The main difference is comparison of investing in real estate syndications versus investing in REITs, which is real estate investment trust. When you invest in REITs, in a trust, it is sort of like investing in a mutual fund. So the return that you get is treated as ordinary income and taxed at your regular W-2 tax rate, which is probably not the most beneficial rate for majority of working people, where in syndications, the income that you get will only be shown as an income on a paper after a number of years, because initially, since we're buying a real estate property, the property is going to be depreciated. So the first several years, the tax return will be showing losses. And if the general partners decide to do a cost segregation study, which essentially allows to take advantage of accelerated depreciation, the losses are going to be much more significant at the beginning. So that will allow all active and passive investors, partners in the syndication, to accumulate significant amount of losses, which they may not be able to use at the beginning because these are passive losses that can be netted against passive income. However, they're accumulated and they're carried over. So you carry them over forward. And at the point when you do get that passive income, you'll be able to net one against the other. That's the benefit that does not exist in Wall Street. And it's huge for folks that are looking for such benefit. Plus, on top, another short nugget, even if it's a gain, even if you have to pay taxes, the maximum percentage would be up to 20%, where, your regular tax rate is probably going to be in the 30s or higher.
Right. Okay. Okay, great. That's awesome. And then, so where do you do most of your projects? They're not in New Jersey, evidently. Where do you normally invest?
Absolutely. Yeah, nothing in the tri-state area. It's too expensive down here. But we go nationwide. And while I started my portfolio for my investors and myself with a number of apartment complexes, we later added two other asset classes. We added mobile home parks and we added storages to our portfolio. And number one, it allows us to diversify. And number two, it allows us to bring many more opportunities to our investment partners. So we go for the investment where the area makes sense for the investors, and it doesn't always have to be the same type of area. For example, I'll give you a perfect example. While Arizona could be a great state for mobile home parks, it may not be the best state for, let's say, storages. And I can use other examples. Or for instance, everyone it's kind of going into Texas for multifamily because Dallas Fort Worth area and Houston are really hard markets and people are looking for properties there, but it may not be the best area for the other asset classes. So while researching the area, you always have to put a significant amount of research into researching the specific asset class, whether the specific asset class is a good fit for a particular geographic area.
Okay. And that's a whole new conversation, is how do you research and do all of that stuff? I feel like I could talk to you forever already.
Absolutely. Likewise, Monica.
So if we can get into it, we will. We'll see if we can touch on that. But one of the pieces that I really want to touch on, because this is something that my audience struggles with. 6 years ago, you had been looking already at real estate for a little while, and suddenly you were like, I have to take action 6 years ago. What was it that made that turn for you, that you decided now is the time? What was it that happened?
I guess I've been reading a lot of personal development books, and that knowledge sort of accumulated, and a combination of things. Some of the investments that real estate investments that we made in the past that didn't work out simply because we weren't sophisticated enough, and when we were choosing them, we did not engage in any specific research. We just bought them because our friends were buying in the area, which was not a smart way to go. And I wanted to change that. I wanted to continue investing in real estate, but I wanted to do it the smart way, the intelligent way. And that's why, in addition to reading a lot of personal development books, I decided to start reading more of real estate books. And I read everything that I could find on the market that was recommended, from Steve Berger's book on buying and selling apartment complexes to two of the David Lindell books, the Multifamily Millions, and I don't remember the title of the other one, then Steve Gallinelli. And I mean, I can go on and on. The list is exponential, and I actually have accumulated a whole library of books that I am happy to share with other folks if they want to read. But the knowledge that I was able to acquire through these books and through listening to podcasts led me to take an action, and the action that I took was starting to invest in syndications.
Interesting. I love that. And so a lot of my listeners, they are either struggling to get started, or they're in a strategy, but they want to up-level their business and they're afraid of taking that next step. So it's really interesting to hear how people push themselves to that next level, or get started, or take those first few steps, sort of wherever you are. Because it is true, I think, that no matter where you are in your business, the next time that you up level feels like a brand new step, right? It's like
Absolutely.
starting all over, because there's a whole new world of things to learn and think about, and so I just love to hear these stories. And it's so interesting to me that for you it was really about getting the education, and then you finally felt like, boom, I'm ready, right?
And I think that's true for a lot of people, Monica. I talk to a lot of people at networking events and at the meetups that I host. And the typical feedback that I hear from folks, well, I want to buy this property, but I really don't know this, and this. And my feedback is always, well, if you don't know, take action. What does it take to find out what this is? Or I don't understand how to calculate certain things, cap rate or cash on cash or whatever it is. Then the next natural thing for me to say is, then you have to educate yourself. You either buy the books, or you get a mentor, or go on YouTube. I mean, there are millions of videos on all these real estate topics. So the only way to take action is to become educated and to understand what you're doing, and it will make your actions so much more deliberate.
That's right. And what I really love that you just said is, I have a policy that if someone says something that intimidates me, I then go learn about it. And so like cap
Excellent.
rates and, ROI and all this lingo that people, syndication, right, is another word that people are like, what the heck is that? And
Sure.
so if I hear a word that feels intimidating to me, I hop on YouTube, like you just said. I don't read a lot. So I hop onto YouTube and then I find out what's the definition of that or whatever. And then it up levels my knowledge base. It makes me feel more confident. It opens up more conversations. But more than anything, it allows me to feel like I can make good decisions. And
Absolutely.
what I find is that it's never as complicated as it sounds. It sounds so cool when people are talking about it, right? But it's
Sure.
just never that complicated. It's a 5-minute video usually to explain any of these terms. So,
Absolutely.
yeah,
Absolutely. You're
I just,
absolutely right. I couldn't agree with you more.
yeah, I just love that, right? So I sound like a really smart person, so I'll do to YouTube.
Absolutely, and you are a smart person because you know what, you're all about taking action. What's stopping other people is they think about it or they dwell on it for a very long time and they don't take action. And I can actually recommend another book on that topic. There is a book written by Mel Brooks, 5 Second Rule. It's for folks that just hesitant or are afraid to take action. I think if they read that book, that at least will put them in a different perspective and they may change their mind and decide to start taking action sooner. But it's a phenomenal book and I highly recommend it.
I love that. Thank you for that. Okay, so let's jump in and talk more about syndication. So, talk to me about how someone can actually evaluate a syndication project.
Sure. So when it comes to evaluating syndications, there are really three important components. And first of all, you have to evaluate the sponsor, the operator, or key principal. All of those terms are more or less equally applicable to the same person. You need to look at their track record. You need to look at what they're presenting to you. You have to talk to them, ask them questions, and really understand, in addition to being hopefully a good operator, is this the person that you want to put your money with? Do you trust them? Do you agree with their strategy? Does it align with your long-term goals? Is what they're projecting sounds right to you? And after that conversation and after doing your due diligence on that operator, if all of it adds up, if it makes sense, then you move on to the next step where you're evaluating the market. So let's say they're buying a property in DFW Metro. Look at the DFW Metro and see if all of the pieces, major pieces, check out for that area. Does it make sense to buy this particular asset class in this area? Once you do that, the next and final piece is evaluating the deal. And when I say evaluating the deal, you don't only look at the quantitative stuff, but you look at the qualitative stuff. Again, what is the strategy? Why are they doing it? What are the comps saying? And then when you look at the quantitative stuff, you don't just look at cash on cash or IRR. The most critical component is to look at all of those pieces combined together to see the full picture. And that's what a lot of people miss, because they see one number and it's stuck in their head, and then they move forward either with the deal or decide not to go on a deal. But the critical piece is to look at the picture overall to see whether it tells you the story and whether that story resonates with you. And if that story resonates with you, then you know what to do next.
Okay, great. So, talk to me a little bit about those numbers. When someone's looking at, normally you get a proposal where they tell
Mm-hmm.
you the building or whatever that they're looking at, what they're planning on doing, how they're expecting it to appreciate, what their cash flow is supposed to look like, what your percentages are, right? There's a lot of numbers, but what are
Sure.
some big things that people should really take note of when they're looking at one of those proposals?
Well, first of all, there are different strategies that can be implemented when buying a property, and each investor should decide for themselves which of the strategy would work best for them. And it doesn't have to be one, it could be multiple strategies. The most common strategy that we implement for our deals is value add. And what value add really entails is that we would like to increase the value of the property. In other words, we want to force appreciation of the property indirectly. And the way people typically do it is there are actually three ways to do it. Number one is by increasing the income. Number two is by lowering your expenses. And number three is doing both at the same time. How do you increase expenses? You either increase rents if it's an apartment complex, or you increase rents maybe if you have small storage units at the property, or you offer some sort of complementary services that people didn't have before. That you may, by the way, you may not necessarily be charging separately for the services, but it would be included in a base price of the apartment rental. And such services could be maybe it's a laundry, maybe it's gym, or maybe kids playground, or whatever it is, or covered parking, or maybe garage, things that the tenants didn't have before or didn't have in such a great condition before. And you're going to be either improving these services significantly or bringing brand new services to folks that they didn't have before. And that allows you to increase the income. Same approach on the expenses. You look for things that have not been done efficiently, and a lot of folks start with plumbing because plumbing is one of the larger expenses, of course. So they try to install water efficient units in the bathrooms. They look for the ways to lower the electric bills by installing things that are more electricity efficient. You look at the payroll, see who's been on the payroll for the property, see whether that number of team members makes sense, whether they've been compensated appropriately. There are always other ways and other things that can be looked at, but those are more or less the most common things that you look at the income statement. And again, if there is an opportunity to take on both income and expenses and bring it to the level where it's supposed to be, then the sky could be the limit, and you're going to make so much more money for your investors and yourself in the investment.
Got it. Got it. I love that. One of the things that you didn't mention is rehabbing. Do you do rehabs for your projects so that you can increase the rents, or how does that work into your projects usually?
Absolutely, absolutely. It depends on the condition of the units and the condition of the property overall. If the property calls for renovations, then we will definitely renovate the units, and that will also allow us to increase the rent so much higher because of the renovations. So yeah,
Right.
that's definitely there.
Got it. Great. Thank you for that. So, could you tell us how to evaluate and find a quality sponsor, syndication sponsor?
Sure. From an investor perspective, right?
Yes,
Yeah.
exactly.
Yeah, a lot of it is word of mouth. People go to different conferences, networking events, and talk to each other. There is plenty of real estate investment clubs everywhere. And again, you don't have to be living and investing in the same area. You can find plenty of real estate clubs in the area where you live, and just talk to people about their investments, ask for the feedback for them. And then Bigger Pockets is one of the great resources that I always recommend to anyone, from the beginner to intermediate to the advanced investor. I mean, Bigger Pockets is really like the Google of real estate. There's tons of information on anything and everything, and it's a great resource to learn about different strategy, to find professionals in different areas, and just simply to connect with other investors that are maybe doing what you're doing, or maybe doing something that you aspire to do, and you want to reach out to them and talk and ask for their feedback. How did they start? What are they doing? And what would they recommend to the new and aspiring investor? So it really comes down to doing that due diligence, talking to people, networking to folks, and asking them questions, and finding out who are the operators that they are working with or would like to work with.
Nice. I love that.
Thank you.
Great. So I have a million other questions, but we're already running out of time. So a couple of things that I'd like to talk about, but we're going to push it off to the extra section, is the first one is what questions to ask a sponsor to see if you want to work with them and if they are reputable. And then the other one is, if we can find the time, I'd love to talk a little bit more about doing your due diligence on markets. Since you
Sure.
look at three specific kinds of investments: mobile homes, apartment buildings, and storage, and you mentioned that each market, each asset requires a different kind of market, I'd kind of like to get a little feeling of kind of what you look for. So
Absolutely.
I'd like to talk about both of those things in the extra portion of the show. But for now, why don't you tell people how they can reach you?
Sure. They can find me through social media, either my website, samofinancial.com, or we're LinkedIn, Facebook, Instagram, or Bigger Pockets.
Okay, awesome. Awesome. And then I know that you have a free report that you wanted to give as a gift to my guests. Could you tell us a little bit more about that?
Sure. It's a free report that details reasons to invest in multifamily, and it explains in details what those reasons are, and why they're important reasons to start investing in apartment complexes.
Nice. Thank you for that. That'll be really, really valuable for people. So ladies, the link is a little bit long, so it will be in the show notes. So you can just go down there and click on it and get that free report from Alina. Okay, Alina, are you ready for our 3 rapid fire questions?
I am. Let's
Awesome.
go.
Perfect. So tell us one strategy on getting started investing in real estate.
Start educating yourself. Education is the key.
Great. And tell us one strategy on being successful in real estate investing.
The most critical step, I would say, is in addition to education, of course, is networking, connecting with other people, and finding the niche for yourself and concentrating on that one specific niche. Whether you're active or passive doesn't matter, but select the niche within the route that's good for you, and study that niche inside out until you feel absolutely comfortable investing and taking action within that niche. I think that's the most critical component, and I think that's the reason why a lot of people don't take action, is because they don't fully educate themselves, and that's what's stopping them from taking action.
I love that. And what would you say is one daily practice that contributes to your personal success?
It's Miracle Morning. So again, Miracle Morning is a book written by Hal Elrod. I read it a number of years ago, and after that, I decided to come up with my own Miracle Morning routine. So Hal details his own routine. I'm not going to go into that. I'll let people read the book because it's a fantastic book, and I highly recommend it. But I created my own variation of that Miracle Morning routine, and it helps me stay motivated, still helps me stay positive, active, and just continue with my day no matter what. I love it.
Nice. Yeah, we've had Hal on the show actually. So my guests loved him. So, and what's really funny is that, so I also wrote a book called Choose Bliss.
Mhm.
And the very first proponent of bliss or pillar of bliss is to set up your morning for bliss. So
Awesome.
I talk about the morning routine too. It's a
Love it.
really important thing. And people just don't, I think the thing that people don't understand is that they already have a morning routine. It's just, is it a conscious morning routine? Is it setting them up for success? Or is it just kind of this unconscious thing that they do because that's how they get through the morning, you know?
Love
So,
it. Love it.
yeah.
I'll have to read your book.
Oh, thank
Absolutely.
you. Yeah. It's called Choose Bliss.
Sounds good.
Yeah.
Thank you.
So, Alina, this has been amazing. Thank you so much for all the information you've shared so far. And I'm so excited about talking in the extra section, but thank you so much.
It's my pleasure, Monica. Thank you for inviting me.
Yeah. And ladies, thank you so much for joining Alina and I for this portion of the show. If you're subscribed to Extras, stay tuned. We've got more awesome stuff for you. If you're not subscribed but would like to be, all you have to do is go to realestateinvestingforwomenextra.com. So it's realestateinvestingforwomenextra.com, and that's where you go to get the extra portions of each of these shows that we do every single week. If you're leaving us now, thank you so much for joining us for this portion of the show. I look forward to seeing you next time. And until then, remember, goals without action are just dreams. So get out there, take action, and create the life your heart deeply desires. I'll see you next time. I hope you enjoyed today's show. If you'd like to download my favorite investing strategy, just go to blissfulinvestor.com. See you next time.